Hi, this is Mark Item with HONU Trading with the weekly review for the week of July 31st, 2023. Remember, this is for education only, not recommendations to buy or sell. Time frame and risk tolerance is key. Never forget that job one is risk management. You can follow me on Twitter at HONU Management, at HONUMGMT. And here's our agenda for the week. I would say the bull abides. Another week for the bulls. Since we broke above SPY 420, that resistance level, 7 out of 9 weeks have been higher. So last week we had a couple of key earnings, Fed week, and then we had a gap and trap on Thursday, leading to throw up Thursday. Biggies definitely outperformed the smalls this week, as we'll see the heat map in a moment. Risk on remains in effect. I would say financials are out of the woods now. Q2 earnings season continues next week with a couple of biggies. Jobs Friday may not be as big a deal. And if you find this content valuable, smash that like button and hit subscribe. So on our heat map, Microsoft, which reported earnings this week, had a down week. Google and Meta, which also reported, they had big weeks, up 10%. NVIDIA keeps rocking higher. Tesla gained 2.5%. Amazon and Apple, they're up next week. Those are the two biggies. But barring that, the week kind of had more of a Valentine's Day feel. Lots of red, a little bit of green here and there. Kind of a mixed bag, but leaning towards the red. Taking a look at the bigger picture weekly charts, the SPY is now only 4.25% off its all-time highs. And since breaking out above this 420 range, 1, 2, 3, 4, 5, 6, 7 weeks, 8, 9, 7 out of those 9 have been positive. Price is above the 10-week moving average, which is the red one, is above the 30-week moving average, which is the blue, and that's above the anchored volume weighted average price, the green from the all-time high. So all of those are stacked in the correct order, and again, the bull abides. The Qs, same thing, 10 well above the 30. If anything, that might be getting a little stretched, but that's kind of your railroad tracks. They're both moving equally higher, and 10 above the 30 above the AVWAP from the highs. Qs are only 6% off the all-time highs. Mid caps, those are stacked now in the correct order. The 30-week is caught up to the anchored volume weighted average price from the all-time high. Those are 7% off the all-time highs. Small caps, they're definitely the laggards. Price is finally above the AVWAP from the all-time high, but the 10 is above the 30, but both of those are still below that AVWAP. And this is nearly 20% off of the all-time highs. When we look at the daily, got the moving average clouds on here. Price above the 8, above the 21, above the 50, above the 200, above the AVWAP. And since we broke above that 420 level, that's what trends look like. I want to back up to a couple of weeks ago, we talked about a divergence. Now, I'm not a big fan of divergences. They can get you leaning in one way or another, but here we had relatively equal highs on the SPY and a lower high in your momentum indicator, in this case, the relative strength index. Now, this might get you leaning in one direction, but price is the key arbiter, and unless and until price drops below that low, in between these two highs, this is just a divergence. Now, as we've seen, that got you perhaps leaning bearish, but price had already moved higher here, and it's moved consistently higher since then. So that divergence is no more. Here's your intraday look at the week. If you ever want to take a day off, Monday might be the day. I can't remember how many weeks in a row where the market is maybe gapped higher or gapped lower and then just gone sideways on Mondays. Now that'll be the sportscaster's jinx, and of course next Monday we'll take off one way or the other, but there it is. Moved a little bit higher on Tuesday going into the Fed. Snooze fest, wham, wham, wham. There's your Fed move. Gap and trap. Opens on the highs, close at or near the lows. That's your classic gap and trap kitties. On Friday, slightly higher overall, but higher, lower, higher. Much ado about nothing. For the week, SPY gained 1.05%. On our relative strength indexes, the biggies definitely outperformed the smalls. Equal weighted S&P dropped some. Equal weighted Qs dropped some. Mid caps, which are equal weighted, dropped some. Ironically, the smalls held their own. They didn't really fall off much. Our risk on indicator, hat tip to Chris at Chivaco Capital. This is your S&P 1500. That's your 500 large, 400 mid cap, and 600 small, the composite index, divided relative strength with a 3 to 5 year Treasury ETF. When this is moving higher, stocks are preferred over bonds, risk on. That's what we have now. When, like the COVID crash and the 2022 bear market, bonds are preferred over stocks, and this indicator moves lower, risk off. You can also have long periods of time where it does nothing. It doesn't really tell us anything. But clearly, we're now in a risk-on kind of mode. Financials, I would say, are out of the woods. The XLF is above the low just before Silicon Valley Bank failed. We did have an oops reversal back here, but clearly higher highs and higher lows. Still need to take this out, but we're pretty close to that. The bigger banks, not quite as strong. They're almost to the lows of Silicon Valley Bank. And the smaller banks aren't even close yet, but I think we can take the Scooby-Doo rut-row off the table. Earnings continue next week. Two of the mega caps, Apple and Amazon. Some other big caps, Merck, AMD, CVS, Qualcomm, Shopify. And again, for the theme for the week, the bull abides. 7 out of 9 weeks, biggies outperformed the smalls. Risk on is clearly in effect. I'd say the financials are out of the woods. Earnings season continues with a couple of the mega caps. Jobs Friday may not be such a big deal. And also, remember, we're headed into the dog days of summer, thin flow summer trading. As my buddy HONU always says, small losers win.